Hey guys, how's everybody doing? It's about 4:30 in Chicago. Welcome to the Daily Macro Review. We are on the 1st of February, and because we are at the beginning of the month here, we're going to take a look at some of the monthly charts and see, what type of candlestick formations we have and how the charts look under those longer-term time frames. Now, today was a very important day. We had the Federal Reserve that came up with their statement. They increased rates with 25 basis points, and the markets had a little bit of a bearish reaction to kind of begin. As soon as he kind of started speaking with the conference, about 30 minutes later after the announcement, the markets dropped a little bit. But then, as he was kind of going through his speech, the markets reversed quite sharply because pretty much, there was not really, and I think I've talked about this, there was not really a big way for him to surprise these markets in any way. I mean, he tried, he came in the beginning and just said that they're going to keep at it until the job is done. But this is a message that the market has been, hearing for a while, right? That's all of that stuff. It's already been priced in. We're sitting at about 4.75. 450, 475. And if they raise, I think one more time, we're going to get to 5 in March, and that's kind of what he wants to do. That's what he said, that they might do a couple of more hikes. Now, the markets are way smarter than that, right? They're just kind of trying to, get ahead of that and maybe anticipate what's going to happen maybe 6 months from now. And with the rallies that we're starting to get in here, maybe they're just assuming that, he's been going a little bit too fast. Maybe the economy will slow down. You're going to get in some kind of a recession. The inflation comes down, and there's no need, obviously, to keep the rates elevated at these levels, maybe even towards the end of the year. So the markets are kind of sniffing that out, and they just, they just kind of push it back higher. Again, he was not very aggressive. He got a question about, if he is worried about, the increase in asset prices, and, that these liquidity conditions, seem to be loose, and, stuff like that. And he did not really fight back on those questions, almost like, at least from what I read on it, was like, I don't really care if the market goes up. It's fine with me. As long as I'm getting my inflation down and the unemployment rate to stay low, I'm pretty much achieving my target. Markets can do whatever they want to do. I think that he got asked also about the bonds as well, and he didn't have much to say about that either. Almost like, the bond market is going to do what it's going to do. I'm just going to kind of increase the rates here. But the bonds today actually had rallied and the yields dropped, right? So that's the bond market basically telling the Fed, you're pretty much done here. You don't have, a lot really to hang on. Now we'll see. There might be some surprises in the CPI, although nobody seems to believe that they're necessarily going to be here maybe in the second half. And, we're going to have some pretty important earnings tomorrow. Just to kind of switch quickly on that, we have earnings. It's a big, massive day tomorrow with a lot of these major stocks. I mean, Meta reported today, and it went up from 150 to 180, $30 in like 30 minutes or something like that. So just crazy reaction. We've had these reactions on the downside last year, if you remember. It was some crazy sell-offs happening in there, and we're getting now an opposite, an equal reaction in the opposite direction. Okay, so, and then we have the job report on Friday. I mean, if that comes, very, very strong or stronger than expected, then, they could pause a little bit this rally. If it comes a little bit on the weak side, then the markets will take it. See, we told you, you're going to be cutting rates here because, job market, it's, people are starting to kind of, it's not as strong anymore, and maybe there's some job losses, whatever, but, or not as fast pace of hiring as we're used to, basically. So I think that's the narrative we are right now. I mean, we cleared up through a bunch of these trend lines. Remember we had a bearish stance on the market for the first half of January, and then after 20th of January, I kind of started to flip on the other side, and because the signs were coming in underneath the surface that these stocks are not responding to the downside anymore. And we kind of had to make that flip, just to kind of try to be on the right side of the market. So we'll see for how long this is. Maybe it's a bit extended here, but, we'll continue to kind of watch the counts and look at the candles and see what comes out of it and kind of what happens. So that's kind of where we are. I still think this rally will probably going to continue to travel upwards until March. So the month of February, maybe even to the middle of March. And then we're probably going to get some pullbacks. And then, then we'll see what happens all the way up until May. You might still have some sell-offs coming back, doing some corrections, and then maybe you begin the larger advance in the second half of the year. So, but that's looking a little bit too far down the road. You can see in here the Dow Jones going back to today, it was up about, not even, it pretty much went up to being flat on the day. It was the weakest of them all. There were some stocks in here that weren't too happy, especially staples and healthcare and whatever. It's up on the Dow, that's dragging this index, because there's a lot of, very large cap stocks, and it's pretty diversified, right? The S&P 500 was up 1%. The Nasdaq was up about 2%. So pretty strong moves. You can look mid caps, small caps. Nasdaq 100 was up, 2.1%, and then the VIX just kind of crashed lower, and we dipped below 18, as low as 1775 on the VIX. You look in here, technology up 2.35, discretionary communication. So everything that, you wanted to see in terms of risk, climbed higher. What's surprising is that consumer staples was also up. Very interesting. I would have expected to see this towards the back of the list, and actually financials to be up there. But no, consumer staples, they got bought today. That's an interesting sign. So it's not necessarily a super positive one, but maybe there were a few stocks in there that kind of got pushed to the upside. So that's kind of where we are. Healthcare, XLV in here, again, towards the bottom of the pack, along with utilities. Which again, it's a very defensive sector, and energy again, just down. This was the sweetheart of the last year, and I kept saying, I don't think energy is going to perform well this year, and it's probably going to be a sector that you want to be underweight, maybe even short, at times, but, it's just not looking too good on the energy side. All right, let's see kind of what happened in bonds. So you could see in here a drop in yields across the curve from the 30-year to 10 to 5s. The dollar lost, pretty well, about 1% here on the UUP. Gold broke higher. So if we look at the commodities, gold broke above, what is gold up here? It was kind of consolidating back here in the GLD, and it's up 181. 67. Silver is not really responding that much. It's still kind of below some larger trend lines. We'll take a look at it in a second. But it seems to be kind of coming strong. And the nat gas, 850, continued to move lower even today. So I've increased some long positions in here. I bought some calls. They're up into the, trade alerts channel there. I sold some puts, some credit spreads. I think I sold the 9. I sold the 9 and I bought the 8 with about a month to go. So I'm expecting a rally here in the next couple of weeks. And I've also bought some 9 calls that are expiring, I think in April. So I want to give those a little bit longer to go, because I think we're in the final stages of this move. Not a lot of confirmation from price yet, but, I got some data that I'm watching in there, and it's suggestive that, some lows are coming. So not necessarily in terms of counts, but something a little different. So this is kind of where we are on kind of what happened today. And then if you look at cryptos, they had a little bit of a slower start, but Bitcoin also kind of started to break up higher again, almost trading 24. And we'll take a quick look at the chart before I do the full Bitcoin video a little bit later. So, all right, and then across the spectrum, just a flight to risk in here. I don't know what's going on with my mouse, but it seems to be dancing the wrong way back here. I might have to adjust the settings. So anyway, if you look down here at the bottom, you can see, some very, very strong ETFs from high beta. You look at XLK, Moat, home builders, home construction, consumer discretionary, mid caps, metals and mining. So a nice rally across the board in here. I have the kind of a short squeeze list in here as well, where it's like you look, and you have, I don't even know what this is. SFT, Carvana, was up today about 33%, MVIS. So these are all kind of, just those kind of meme stocks, and they had a pretty good, pretty good rally today. I mean, look at Fubo. It's one of the stocks that were long in here. We were long Carvana. We sold out of that position. I moved some money onto that ride, which didn't do good today. I was like, what in the world? Everything is going well. And then that ride, I don't even know. Oh, it's up here, like a mere 76 basis points. I was very disappointed. I should have stayed in Carvana looking back. But, Carvana and Fubo, did well. So we do have the Fubo one. But anyway, this is kind of a list of a bunch of stocks that are getting, that have the potential of getting squeezed high. List here on the daily time frames. I'm going to kind of start from the top. In here, you can see the S&P 500, the accumulation distribution line breaking to the upside. The PPO kind of starting to push higher, so that's great. You're seeing the break above the trend line in here, quite aggressive. You have, the 50 over the 200 starting to kind of push up there. You got a 21-day. You got plenty of volume. So there is, there's every reason to believe that this has legs to go to the upside, at least by the way this kind of looks. It's hard to say, well, I'm not really trusting this breakout. Well, there's not much to do in here but trust it because, the evidence is here. Like you have volume, you got, so you gotta have really good reasons to say that you don't trust this, when this evidence kind of points, that it is a definite breakout in here. So we'll see. I mean, there might be a little bit of a retest. Maybe it was the one yesterday, it was just a short one. But as long as you remain above this 50 and 200-day moving average, I think, there's a decent chance of a continuation back towards this 4,300. That's the next high we're going to be watching. NASDAQ, another strong breakout. This is the trend line. It's because I zoomed the chart, to kind of give me the trend line from the highs in 2021, and 2022. And then you'll see that's kind of the line. And I mean, look at the NASDAQ, just kind of broke above its 200-day moving average as well. It's going to be a while until it does the crossover, but nice accumulation in here. The jaws are opening here on the PPO, so it looks good. The RSI is not overbought. It looks decent. NASDAQ Composite, same story. You look at the Dow Jones, it's still kind of, not doing a whole lot. Like today it had, it sold off and then we recover, which is good to see. But back here you can see basically, that you have this low and you have this kind of left shoulder, right shoulder, and it's trying to create this continuation pattern and try to break, out of here. And as I counted yesterday in the video, I was looking at this as possible a flat, an A, B, and then with the C in here, and just have a very simple flat in a flat, and then just have an A, B, C for a running flat, and then now we begin to break to the upside. So pay attention to this pattern because it's very interesting. It could work out as long as we're kind of getting above this trend line back there, this so-called neckline, right? For the lack of a better word. Okay, the Russell, look at this, just a crazy move. And I know. I mean, we've been looking at this as a second wave pullback, but, the moment I saw that this is turning from here, and now, to remain forced into thinking that this is going to be an ABC, that's a very big stretch. Okay, I mean, look at the size of this move compared with this decline, and pretty soon this high is going to get taken out in the Russell, and, then there's not going to be a lot of arguments on the bearish side. So as long as, there were arguments to remain bearish, as this market was kind of attacking this trend line, as this was moving lower, as you kind of had a little bit of a pullback, there was chances for it to break lower, but it didn't. It continued to push. So when the lack of evidence starts to appear, when that evidence that you're looking for, it's not there anymore, I think the smart thing to do is just get out of there, right? Because the market is not doing what you thought it was going to do. So if it doesn't, then there's no point in sticking around with that, with that view, I guess. We're all kind of learning this as we're being in this market for longer and longer and longer. Try to have the ability to switch the views as the market proves you wrong. And that's, sometimes it's an expensive lesson. BDC in here, trying to break again above 24K. I still think there's got to be a correction in here somewhat, but, maybe we're just not going to get one yet, right? It looks like a third wave, but, You know, it's just not really pulling back. It's choosing to consolidate sideways rather than down, which is a correction on its own. It's fine. It doesn't have to kind of pull back. That's a normal expectation, but it hasn't happened yet. So we'll listen to that. But I'll talk about Bitcoin in the video that I'm going to do next. TLT in here, you know, treasury bonds moving higher above their 20-day moving average on pretty good volume. Which means that yields are coming lower in here, about 352, I think we came today. Yes. You know, and, you know, we'll see. I mean, they should continue to be, if this markets continue to push higher, yields, you know, should continue to come lower, assuming that the Fed will slow down or maybe change their stance to maybe even cutting towards the end of the year. We'll see. All right. So let's take a look at the macro list in here on the monthly time frames, and you can see, you know, we had a pretty strong close in the month of January. It was one of the strongest. I think we were up about 6%, if I'm not mistaken, you know, and that, you know, that January effect, you know, might work out. And usually kind of, you know, what happens in January tends to, you know, continue for the rest of the year. This is what happened in January last year. And, you know, here is kind of where we are now. So pretty strong close overall. We'll see what's going to happen in the month of February. I mean, these are obviously the next targets up there at about 4,300. But if you see what happens here, right, you sold off, then you came back with another bullish, almost like a bullish engulfing, like some type of a piercing candle. Then, so this was the first sign that the bulls are starting to kind of like this 3,700, 3,600 level. Then you went up, then you sold lower again into the 50-month moving average, and then bulls came out at it again. And overtook almost the entirety of this candle. Then you had a hammer follow that, right? Then they tried to sell over again, but failed, and now they're coming back. So the bulls are telling you here, you know, that they really mean business about this market. Because every time, you know, any bearish candles appear, they came right back and they overtook it to the upside. So I think this is a signal from price action that tells you, like, be careful. You know, because they could try to push this market much higher. And I'm not saying this just because today was a bullish day. I mean, I've been, you know, trying to kind of respect this back here. But when the month of January starting to happen, like, I don't think that this is, you know, this is going to work out. Plus, you have a very nice bounce from the 40 RSI on the monthly in here, and without any continuation lower. So that's a signal. Look at the NASDAQ also, you know, just a nice, again, just a nice bullish momentum, two bullish candles in here on the monthly, one bearish one. It's the only single bearish candle, you know, within the last 4 months. And here we are, you know, trying to kind of get back, and already making you know, a new high in here, month high, and, you know, probably attacking that 13,500 by the end this month is over. Look at the NASDAQ composite, same story. And then, you know, here Dow Jones, it's not very convincing. I mean, it had this huge bullish engulfing of the 50, which is enough for me because it's a huge one. I remember we looked at it as an ABC flat, but if this is a wave C of a flat, you're supposed to go lower right away. You're not really supposed to linger around here much, right? Because wave C's are just, you know, the trap waves, and it hasn't followed through. So that concerns me and says, I mean, in a good way, and it says that it's probably going to break to the upside. So that's just pure, simple kind of candlestick analysis. Russell in here as well, you know, again, look at these three candles, white, right near the black ones. Okay, so every single fight the bears took, the bulls took it back. Okay, and that's a big sign. That's a big sign. That tells you that you know, there is buying accumulation power back in here. Okay, so I don't care whatever Powell wants to say, and, you know, whatever we are, this is just the price action that the market is kind of showing us in here in the candles. So that's got to be respected. And then, you know, Bitcoin in here with a very strong close, you know, monthly close in here. You know, I don't have a good feel on the Bitcoin market because, you know, there's not that many, unless you're really following on-chain data, there's not that much, you know, kind of substrate to go into like you can do in the markets. In the markets, you can study, you can study volatility, you can go into look at the breadth, you can go and look at the sentiment, you can go and look at the, you know, the risk parameters. There's like a bunch of stuff there that, you know, that can tell you. You can look at the internals of the, you know, at the sectors, you know, so all those things can help you paint a better picture on the stock market than necessarily on Bitcoin. But so far, it's been acting bullish here, and we'll see if it's going to follow through. And then, TLT in here, pretty good on the bonds, yields pushing lower. Here's the dollar, again, approaching a massive support here at about 100. I think it's, in my view, I think the dollar will bounce, probably, I don't know if it's going to make it up back to 104, 105, but I think for the next couple of months, it's probably going to pause and try to retrace a little bit. But if it does it slowly, that should not derail risk assets. If it does it very abruptly, then, that could put some pressure on the markets, or at least, a pause on them. We'll see. Gold in here again, just on the monthly, super strong monthly close, but it's at a big resistance as well. So that's why I want to be cautious on gold going forward too much, especially if I see that, the dollar tries to bottom. And then WTIC, it's, just pretty much in a nowhere land. Okay, U.S. sectors, and I'm going to close off with this. Communication services, awesome candle here on the monthly. Needs to get back above its 50-month moving average in here to start to kind of gain momentum. But it was one of the most beaten down sectors in this kind of latest bear market sell-off, and it's trying to recover. I mean, Meta today just went up, like I said, about $30. So it's probably gonna show up tomorrow on this chart. I'm waiting for this PPO to turn, to get back from a bear market to, once it gets above zero tomorrow, for bull market. Consumer discretionary, look at this beautiful bullish engulfing, right from these lows. The RSI, I don't think ever went below 40. Which is a good sign. So, we'll continue to kind of look at this with a positive eye now. Consumer staples, pretty much flat. That's defensive. I mean, look at the PPO, is still kind of down. So I don't expect a lot of performance from staples. I don't expect a lot of performance from energy, which is going to lose momentum in here. You can see the PPO will come down. Look at the rate in here. The RSI also losing ground, because it's been a very good performing sector, and it's probably going to take a pause. Or if it goes at a much slower rate than the rest of the markets. Financials, I would expect some good performance out of them, just waiting for this to kind of cross to the upside. But so far, pretty decent price action on the monthly. Healthcare, not looking too good either, right? Look at the PPO, and just, these are more of a defensive stuff. And if we're, moving into, let's say early recession, mid-recession, whatever, then these sectors are not going to be, the market is already going to look ahead towards communication, discretionary, technology, stuff like that. Okay, industrials, holding back here. There could be a breakout out of here. I mean, it looks interesting on the monthly. And then materials also with a strong close. These sectors are fine. I mean, they're not, nowhere here nor there. The fight is pretty much between, kind of all the tech sectors, and then you get industrial and materials, and then you get healthcare, staples, and, utilities, and then real estate looks pretty good. I mean, look at this doji candle, followed by a couple of bullish candles. Actually, this should look pretty bullish. I mean, I think, ITB today, went up pretty high. I mean, that's the home construction sector, and, that looks pretty good. You would not believe that with the rates where they are, right? But it looks pretty awesome. Technology, still a bit timid here, but it's, it's trying to kind of come back in favor. Again, same kind of pattern that you saw into some of the other sectors. Utilities are just kind of down and without too much excitement. And that's about it, guys. I'm going to leave it at that, and I'm going to jump over and talk a little bit about Bitcoin. All right. Talk to you soon. Bye-bye.